26th of May. Thanks for joining me. I need to look at gold. Gold is my favorite market, really, and I'm usually pretty good at trading it. But gold came down quite significantly last week after making a new all-time high. It confused me completely. I didn't expect that to happen at all. So I'm going to look at what could happen next and try and find a reason why gold did collapse so suddenly last week. So I've actually had to go back all the way to the beginning of the rally, which was at the end of the 1990s. Gold hit around $250. It's quite memorable in my mind because that was when Gordon Brown, the then Chancellor of the Exchequer in the UK, who is in charge of the economy, made the dramatic error in deciding to sell all of the UK's gold reserves at literally the lowest price possible. From there, 24 years later, we see that the gold price has gone up almost 10 times since then. So not the greatest trading decision in the world. I don't think Gordon Brown's going to be getting a job in any hedge funds. But I need to go back there because I need to use my Fibonacci levels to encompass the whole move and see if there is any indication that gold has peaked, at least in the short term. And really, I like the way that the Fibonacci levels tie in with these longer term Fib levels going back to 1999. You can see 38.2% Fib. We've got a good swing low around the 61.8. We've got these little peaks around the 50%. And the first all-time high from that rally at 1920 coming in just 10 points below the 23.6% Fib. So this is one indication to me now, with hindsight, of course. I couldn't have said that in the beginning of the week, but it's one indication to me now that maybe we're going to enter a consolidation phase in gold because it's run its course at this stage before the next leg higher. We are clearly in a very strong bull trend. And as you can see, we have been for 25 years. That isn't going to end so easily. There is something on the weekly chart that is of concern. So that was the monthly chart I was showing you in order to get all the data on the chart. Now, of course, we didn't have this at the beginning of the week either. We had the break up to a new all-time high. We'd beaten the previous all-time high, which was at 24.31. We managed to get to 24.49, almost 24.50, and then collapsed for no real reason that I can see. I think there was a strong PMI number, Purchasing Managers Index. It's not the most important economic number out. So I think there's more going on. But now that the week has closed, we can see that we do have a bearish engulfing candle on the weekly chart. This is a bull trap because almost anyone who's still holding a long position, who's bought over the last 6 weeks, is now in underwater on their position. So they're going to be feeling anxious over the weekend, not wanting to see the market go any lower. But having seen the Fibonacci levels and seen the bearish engulfing candle, I would now not be surprised at all to see further losses in gold. I'm not talking about an out-and-out collapse. I'm talking about some profit taking, probably followed by a period of sideways consolidation, which is quite normal in financial markets. We see that in the stock markets all the time, which have been in bull markets for decades. So let's have a look at the daily chart. So there really was nothing on the daily chart, and I've also checked the 1 hour and the 4 hour. There was not even a single candle that would have indicated to me the market was going to come down. You can see that the slow stochastics right at the bottom of the screen, they were not severely overbought. They were not overbought for a long period of time before the market turned down. We do have something of a divergence, a negative divergence on the slow stochastics, but that isn't something that would give me any sort of indication of timing as to when the market could come down. I certainly wouldn't be selling gold in a bull market purely on the basis of a negative divergence on the slow stochastic. So it really isn't until this stage now that we have the weekly candle close that I can actually say, okay, there is a chance of a further move to the downside. There's only one thing else that I can show you that would have perhaps indicated to me that gold was going to start moving to the downside. And that is this very small and really quite irrelevant triangle. Here we go. Very small triangle built up over 2 days, not a big pattern at all. It is a descending triangle. Descending triangles can be bearish when you break the base of the triangle. And in this case, we did, and we went down. We've gone way beyond the measured target, which would be 24.05 up to 24.50. So that would be 45 points to the downside. We've overrun the downside target even, which would probably have been around here. We've broken another trend line down here at 23.52. So a further negative indication, and that happened on Thursday, actually. I did expect something of a recovery on Friday. We didn't get as big a recovery as I thought. We only got to 23.47, and now that I know where we've closed on the week, I think we're going to see further downside moves in gold, just a little bit further to the downside. 23.10, 23.00 looks like a target. but I actually wouldn't be at all surprised to see us retest this low down at 22.77 and even get to the 22.60, 22.50 area. Okay, that's what I'm thinking about for the short term in gold. Silver, however, is a different story. Now I'm going to look over here on my 4-hour chart. You can see that I've got my fib levels in there from February to the peak up at around 32.50, which was hit beginning of last week. This has also suffered quite a correction to the downside for silver. And if you follow my signals, if you're a subscriber, you'll know that I had a buy level at around 30.00, and that has held perfectly. So it actually looks like silver is the stronger of the two for a change. Gold has always been leading the way and silver's been trying to play catch up. Maybe now silver is about to catch up. So we've got strong support around 30.00. It's held. It's a good fib level. It's just above the previous peak here, which we had in April, which was at 29.80. So we certainly don't want to break below 29.80. Not much else to say on the 4-hour chart. I'm looking at the other charts as well. There isn't anything I can particularly pinpoint that you need to know, but break below 29.70 in silver would trigger further moves to the downside, 29.25, and then 28.50 to 28.40 would be a very strong support level. You can see that yourself on here. I've got fib levels. I've got the 200 period moving average on the 4-hour chart, and there's some other bits and bobs on the other time frames as well. So I hope that helps to give you some guidance if you're trading silver this week.